I joined in 97, so we'd had that investment for just going on 3 years at the time I joined. Yeah, the business from the time I started, at least, had struggled and certainly wasn't meeting its investment case. And as it turned out, part of it was about the initial due diligence. It was run by a South African CEO, and I think during the due diligence process, we mistakenly due diligenced his brother, who checked out very well. His brother wasn't the one running our business. So as we got into it, I think there's a couple of things that came out of it. In the early days, we were taking a minority interest, and in that particular case, I think we might have had about 30%. And what we learned very quickly is it's very difficult to really influence outcomes without having a control position. And while we think we're charming and capable and logical, it doesn't always win the day. And in that particular case, the business had to get worse before it could get better. And that basically meant that until such times as cash became very constrained and they needed to do a capital raise, and we were talking to the banks about the lending facilities and breach of covenants, it was very tough for us to be able to make that step forward. And what we did over that period, we removed the CEO, we stepped in effectively and ran the company, which is one of my responsibilities. And after about a year, we found and secured a terrific CEO, guy called Barry Saunders, who had been very successful at Big W. And it is always hard to attract really good talent to a struggling business. So I think we took a view that we really need to get it back on its feet and have a positive trajectory before we could do that. So at the time that we were running it, we took it from a loss making to a modest profit, and then Barry came in and the business really took off. And it was fundamentally the same business, but clearly it needed some old school retail disciplines. And as you know, James, retail is detail, and if you don't get the detail right, then so much can go wrong. So within a relatively short period of time after Barry starting, we were starting to make decent margins and a very positive profit trajectory, and we ended up floating the company in 2004, and it's only recently now that there's been a takeover offer by a Canadian company to actually privatise it again. But in that one, what I would say to you, James, and it'll come up no doubt later in our conversation, it's all about the people. You get the right people on board, and you can change the trajectory of things very quickly.